Hi there, my name is Greg Laxton and I'll be highlighting a few key aspects of ING's 2019 interim results. ING has a weight of 0% in the Dow Jones Global Titans Index and we have a neutral recommendation. We arrived at this by looking at the following. The group is currently trading at a forward PE of 7 times, which is slightly below the long-term average of 8.3, and that's a P/NAV of 0.7 times compared with the long-term average of 1.05. Management has stated their commitment to maintaining the ROE between 10 and 12% through improving the operational efficiency and through revenue growth. The subdued economic backdrop, negative interest rates, and the evolving regulatory and compliance costs do, however, remain headwinds to achieving medium-term targets. The high dividend yield at around 7% is attractive to investors. However, a catalyst for growth is not evident and this may dampen sentiment toward the counter. The group is impacted by global capital markets and by macro environments. Therefore, continued concerns in Europe and any uncertainties may materially impact earnings. The low interest rate environment does benefit the housing sector via loan volume growth and through low loan loss provisions, which should support profitability. However, it does negatively impact net interest income, and with 75% of the group's total income being derived from net interest, any sustained margin pressure on deposits will likely have a significant impact on earnings growth. The extent of diversity of the group will help mitigate the impact of the low interest rate environment. The group is trading at a 37% discount to the S&P Financials Index, which is in line with the long-term average, and with the limited upside potential from the discount to NAV, we believe it is not enough to outweigh the aforementioned risks, and this led us to our neutral recommendation. The Common Equity Tier 1 ratio remained mostly unchanged at 14.5%, and this is well above the requirement of 4.5%. The efficiency ratio, which shows the expenses as a percentage of revenue, was 70 basis points higher at 57.3%. The reserve for loan losses to non-performing loans is currently at the group's long-term average level. However, it is well below the average European bank. This may mean that the group will be more impacted than their peers in the event of a deterioration in the macroeconomic conditions. In addition, the group has a total debt-to-equity ratio of 349%, and this is also above the average European bank level. Interest income was up 7% to 14.38 billion euros, while non-interest income rose by 2% to 2.28 billion euros. The interest expense was up 12% to 7.42 billion euros, and operating expenses grew by 4% to 5.23 billion. As a result, net interest income was up 2%, however the net interest margin was down 6 basis points to 1.53%. Loans and advances to banks rose by 13% to 35 billion euros, and to customers it rose by 3% to 610 billion. The cost-to-income ratio rose slightly by 50 basis points to 56.7%. Adjusted earnings per share was up 3% to 66 cents, and the group declared a dividend of 12 cents, which is in line with the prior year interim dividend. Finally, the NAV was up 5% to 1,350 cents per share. The ECB recently cut deposit rates to negative 0.5%, and this will negatively impact net interest income. The constantly evolving nature of regulations and applicable laws surrounding financial institutions can result in operational challenges. Management has set various targets for the financial year in 2020. A CET1 ratio of 13.5% with applying the Basel IV methodology. A leverage ratio greater than 4%, cost-to-income ratio between 50 and 52%, a return on equity between 10 and 12%, and lastly, that dividends remain progressive. The group is strongly affected by recessions, as can be seen during the Great Recession, where the NAV was down by 21%. And due to their large impact by the global macro conditions, any continued concerns over weak environments, such as in Europe, have the potential to impact results going forward. Before I end off, if you would like to trade, then please contact our trading desk. Investors are reminded that they can refer to our online trading platform, which contains a more in-depth analysis on ING's 2019 interim results. For more information on how to interpret a trade idea, visit the events section on psg.co.za to access previous trade ideas and how to understand the method of analysis we use. Lastly, I'd like to bring your attention to the following disclaimer. Thank you very much.